Welcome back, my dear students. Welcome back, everyone. Welcome back, my dears. Welcome. This is your teacher, Osama Kashwa, and this is another lecture in the transactions of the transactions, accounting transactions. Okay. Sometimes, like we said this also, we said this before, when you come to sell, as example, we have now settled the purchases. So we'll say from account payable into cash, because before this we said from cash, from purchases into account payable. Now when we settle, like I said before in the previous week video, from account payable into cash. Let us go now for the next transactions here, which is here. A company officials like a building that's being the meaning of the transaction, let me tell you, that our company needs to rent a building. This building is for $1,000 per month. This building is like here, $1,000 per month, and we actually need to rent it for 4 months in advance. So we need to rent it for 4 months in additional 4 additional months. So we need to rent it for 4 additional months. Okay, an immediate payment of 4,000 is made. Why? Because 1,000 times 4 months, that will give me 4,000. So that's okay. I told you before, any expenditures, any type of expenditures should be mentioned with its name. So we said this is a prepaid rent, then this would be from prepaid rent into cash. And I said all except only the goods or the raw materials which you buy, like purchases, except this, any other kind of things that you buy for, as example, to generate profits, not for reselling back, you just say it with its name. So here we pay rent, then from the prepaid rent means paid for the future in advance. 4,000 from prepaid rents into cash. What happened in this transaction? The cash is reduced because I paid 4,000 and the cash is an asset. So decrease in an asset is credited. For that reason, the cash would be credited with 4,000. And prepaid rent is increase in an asset because this is a prepaid expenses, is increased in assets. So you put it in the debit side. Let us see these transactions. Company decide to purchase a small tract of land. Okay, the point is I will buy a land with $8,000. Okay, so the same thing is like the previous. In the previous, we said from prepaid rent into cash, from rent to cash. Here, we'll say from land to cash, the same thing, because we paid the $8,000. We paid them. So it's from land into cash. Land 8,000 into cash 8,000. And this is increased in like again. Once you bought the land, your lands are increased. So this would be debit. 8,000 would be because it's increase in assets. You don't need to write this part like I showed you when we're doing the present transactions. You do it like that way on the assignments. You will do it only like that way. But you don't need to write that this is increase in asset, but you understand it, that this is an increase in assets or decrease in an asset. To the cash. Now the cash, because we bought the land, the cash is reduced with 8,000. Our cash is down 8,000. So decrease in a cash, it's decrease in an asset. So that would be credit. For that reason, the cash is credit and the land is debit. Wait a minute. We won't see what happened in this transaction now. The same piece of land is sold almost immediately to an outside party for cash of 11,000. Now, in the previous slide, I bought the land for 8,000. Now, I will sell the same land for 11,000. What do we mean by this? Let me tell you something. If you bought a car for 8,000 and you sold it for 11,000, that means that you have gains or profits of 3,000. You had gains or profit of 3,000. The gap, so the profits would be 11,000 minus the 8,000, the price of sell minus the price of buying, 11,000 minus 8,000, that will give you 3,000. How will be the transaction recorded? from cash because we will get the 11,000. We sold the land, so we got 11,000. This is cash. That means we have increase in the cash because cash is an asset. Cash is asset. So the cash will be 11,000 increase into two things. Land in a credit. Why? Because you missed the land. It's out of your own position now. It's not yours. You left it. So your lands are decreased. So this is decrease in an asset. This is credit. And gains on sales. How much is the gains on sales? The profits, 3,000. So revenues here, increase in revenues is credit. When increase your revenues, that means it's credit. So from the cash into land and gains on sales. If you write revenues here, if you write revenues, that's fine. From cash to land and revenues, that's fine. If you write it like this, cash to land and gain on sales of lands, you are also fine, because this means that you understand the transaction. These are gains, and that's how we record the transactions in case of we get profits. Assume a customer gives a land deal company 3,000 in cash for some types of services to be performed in a future date. This is unearned revenues, because this I didn't, he gave me this, the customer gives the company 3,000 in cash for some types of services to be performed. So he gave the money for you to perform this, but it's not now. He didn't do it. You didn't perform for him the service now, but you will do this service in the future. So it's from cash because the cash is increased to unearned revenue. Unearned actually, because we didn't do it. We didn't get anything, just we have it. And we promised him that we will do the service for him in the future. So this is 3,000. That's what I want you now to know today about all our transactions, and shall see you by the next video. Thank you so much.